All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin day trade analysis session. We're actually going to see if we can find some trade setups on the 5-minute time frame. Okay, that's the title of this thing here. That's what we're going to talk about. So real quick, if you don't know how this works, basically what I'm going to do is I'm going to work with the 5-minute time frame, but I'm going to put the pieces together to formulate reasonable expectations for the day. This is the day trade process, and it requires the day trade mentality. This is not to be confused with swing trades or larger time frame strategies. It's very important that you keep everything separated, okay? So profit and loss expectations, that kind of stuff should all be limited to the day trade time frame. So we're going to talk all about that here. By the way, this is not what I suggest for beginners. If you're very new at this and you're looking to learn how markets work, particularly Bitcoin and all those other things, well, you should start with larger time frame strategies first. And before you even get to strategies, you really should have a good academic foundation, okay? So again, this is going to be a more advanced session here. Many of my followers, you guys pretty much know this. This is for people that may be just, coming into this new right now. So let's get this thing started. All right. So hold on a second here. Let me put the slide up. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. And if I see a trade setup, all right, we're going to talk all about that. I will simulate that using the TradingView platform here. Again, it will be on paper. Okay. It's not going to be a real trade. So if you're going to follow along, I suggest you use a paper trade account. All right. So I'm going to make my charts bigger here in a second. Here, let me just do that. Okay. Now, one thing I want to point out, actually two things. First, this chart right here. Hold on a second. Let me just move something over here. All right, hold on. Okay. This is my daily chart right here. Okay. And oh yeah, let me say hello real quick. I got Paul. I got Z. Good to see you. Han, Ramen. All right. Got my. You got Paul. You look new. I've never seen you before. Welcome. Okay, so I described this situation here in my TradingView article. Okay, I described that. Now I missed this trade. This was a swing trade long. Okay, I described this scenario on Sunday, and this basically took place yesterday. The long would actually have been from 21,895. That basically would have been your entry price. Is anyone in this as a swing trade long? Now I missed it because I have so much other stuff on my plate. I'm just not able to babysit the market. Okay, and this would have been, this fit my criteria for a swing trade long. So I'm kind of frustrated that I missed this. But if you have taken this, this was the idea, okay, to try to catch the retrace off the support zone. It never went to my ideal price. Okay, this was my ideal price. It never went there, but it produced a setup earlier, okay, inside the zone, and that's what I was looking for. That would have been acceptable, and now it's on its way. I'm not going to buy it now. Okay, so I missed it. I'm hoping someone took this, but this was a trade that I should have called in the channel. Of course, that's easy for me to say now because we see this after the fact, but you guys know I mentioned this specifically in the TradingView article. So you can go and read that. The stop, by the way, would be below this low here, but actually 21,351, that's about a 500-point stop. A little tight for the way Bitcoin moves. So in a situation like that, you'd want to use maybe like 1,000-point stop. You took alts. Okay, cool. Well, good, Han. I'm glad someone's taking advantage of this. But that was the idea. So this thing, as far as price targets, you're looking for this thing to make its move and test the high. I mean, that's realistic. Okay. Now, I'm not, I like to, like I said, I'm generally not a Bitcoin bear, but I'm still not fully convinced that we're in like some type of bull market here. We could be in a transition. The point is, we want to know what's realistic and proportional to this type of movement. So a test of this high is realistic. Whether you're bullish or bearish, it's still realistic. In fact, a higher high is likely because this is a higher low. All right, that's all within reason. So testing the 25Ks or above 25K is within reason, unless of course a conflicting signal comes along, right? Which we don't have at the moment. So that's the bigger picture. I usually don't cover that in this stream, but I wanted to mention that because that was a trade idea. Now, the other thing I have to mention real quick. Now, let me change this over here. We're going to change this over to the 30-minute chart, okay? Because that's the time frame that I use to evaluate structure and a context for day trades, okay? Does that make sense? Now, before I talk about this 30-minute chart, so I have the 30-minute on this side, and on this side, I'm going to switch this over to the 5-minute, okay? And I'm going to switch this over to a Bitcoin perpetual futures chart here in a moment. Let me just first mention something here. My auto setups. I talked about this briefly on Monday. Auto setups are nothing more than a screener. TradingView has a screener, right? You can see the stock screener I'm pointing to there. It's a screener with my specific criteria plugged into it, and then it takes the results and it pushes them into a channel on my server. The channel is called Optionable Stocks, Optionable Auto Setups. That's the name of the channel. I'm probably going to change that name, but my active investor members have access to that channel. Now, yesterday, it produced a result, and I looked at the channel, and it said there was a bearish reversal setup, but it was blank, okay? So I have to fix that, and then I went in there today, and I put the symbols, but I got the symbols wrong. I still got them wrong myself. The symbols that this thing called up, and we could take a look at one here, is KHC, which is Heinz, KG, I believe was the other one, and ENB was the third one, okay? Those three stocks, optionable stocks, met the criteria of a bearish reversal, okay? So I have to correct the channel, but the thing is the bot almost got it right. It got to every step except for the part of getting it into the channel. So I have to fix that. Again, I'm not a coder. This stuff is not exactly easy for me, but I will fix that. So the point is the auto setups right now looks at a select group of stocks, optionable stocks, a narrow range of them, okay, within a certain price range and certain volume criteria. And it doesn't produce a result every day, all right? It produces, I have a bullish scan and I have a bearish scan. So, from what I've seen, right, from the testing that I've done, it produces maybe a couple of results per week, which isn't bad. Now, auto setups are nothing more than a starting point for a potential swing trade. What separates an auto setup from an actual trade idea are the orders. The auto setup does not give you orders. It just gives you a list of stocks or a list of symbols. From there, you have to decide how to place the orders. Does that make sense? Hey, Armin. So, you would look, so let's pull up one. Let me just pull up one really quick here, okay? So let's take a look at ENB. This was one of the suggestions. Man, oh, that's a 30-minute. Okay, I'm like, man, that's not a good looking chart. Let's go to the larger time frame here. Okay, this is what it called, I believe, right? ENB, and this looks about right. Okay, so the auto setup called this stock as a short. So what to do here? First of all, if you're taking stocks, this is why they're optionable. I picked optionable stocks because the moderator in my chat room mostly calls options, right? So you don't have to trade options to trade this. You can trade the stock outright, but this would be a good choice for options. You can buy a put, okay, or you can do a vertical spread, a bearish vertical spread. That would be my choice. I'm not going to explain all that here, but the point is this: if you were not going to use options and you were going to actually short this stock, you would say, okay, well, this is it was based on this candle right here, okay? That's what it was based on. So you have to use that previous candle as your point of reference. So you would actually come up with your orders. You'd say, look at the low of this previous candle, which is 39.47, right? You could round that to 39.25. Either way, that trade would be in play right now if you took that, because look, the low today is 39.31. It went below the low of that candle. You'd have to put your stop either here, which is a little tight, or up here, okay? And you would have to gauge your risk you gauge your profit target based on that risk. So, what is the risk to here? The low is 39.47. The high is 40.08. What is that, about 50 cents, something like that? So if your stop is about 50 or 60 cents, maybe you want to give it a little more room. Maybe you want to give it $1, even though you don't have to give it $1. Sometimes it helps to give it a little more room. Well, your profit target needs to be at least that amount, 60 cents or $1. So if you're short at let's say 39, let's say 39.45, then 38.45, which would be around here, that would be your first target. Okay, you want to at least aim for at least 1-to-1, at minimum 1-to-1, but usually a better choice is 1.5-to-1. Right? Does that make sense? So all right, so I just wanted to run through that. I'm going to make the correction in the channel because this was one of the stocks, and KG and KHC, all right, all bearish reversal setups. I don't like to short stocks outright, by the way. I prefer to use options for situations like this because they can gap. All right, so let's go back to Bitcoin, and let's pull up the Bitcoin perpetual chart. All right, so those are my auto setups. I just wanted to mention that. By the way, because someone had asked me a question about the auto setups and what they are. And for the active investor group, right now it's set up for stocks, but I am setting up also a Bitcoin version of that, where it will basically scan the top 10 most capitalized coins. So Bitcoin, Ethereum, Litecoin, XRP, top 10 list, most capitalized. And it will look for certain situations or setups in that list only, and then push the result to the channel. Okay, so that is not set up yet, but that is also going to be for my active investor group. So a lot of you here are active investors, you're part of that group. So I'm just telling you what you're going to be getting soon. If you're not a member of the group, let me know if you're interested, and we can talk about that. But most of you guys have that coming. Okay, so let me know if you have any questions about the auto setups. But I'm going to be talking about them, and I'm going to one other thing I'm planning to do real quick. I know, like, let's get to the trades here. I know. But one thing I'm planning to do with those auto setups is I'm planning to take like a random one, like that ENB, for example, and putting the trade idea together with the orders, and then putting that in the trade of the week channel. Just, and so people have an opportunity to see how it works and see the results of these things. One thing I have to say from the tests that I've done is, since my scans are looking for momentum, like brief momentum spurts, these are not things you hold on for very long. A lot of them are green, like temporarily, and then if you continue to hold on to them, they turn red. So you have to take your money, okay? Or you have to be very on top of them as far as adjusting your stop to break even to avoid those red trades, because I see plenty of examples of green trades that turn red that you could have at least broken even on if you were actively managing them. Does that make sense? Okay. Yeah. Okay. So yeah, Han. So it's going to be, you have access to the channel. Okay. Again, it's optionable. The channel is called Optionable Auto Setups right now. I'm going to change that name, but you'll still have access to the channel, and it's still going to be obvious what it is. You just have to check the channel. And by the way, the setups are produced at 4:30 Eastern time, or around 4:30 Eastern time every day. Okay, that's when the check is made. If there's no result, nothing shows up in the channel. If there's a result, something will show up. So that's between, again, 4:30 and 4:35 p.m. Eastern time. That is when you should check, and that gives you your symbols to prepare for the next day. All right, because it requires a candle close, first of all. So once you have your information, you have basically 16 hours to come up with your trade idea and formulate your plan. Okay, and that they're not all 100%, by the way. Some of them completely fail. So you have to use stops with these. These are not investments. Just want to make that clear. Okay, the Bitcoin one will probably scan at another time. I'm thinking, because I want the candle to close, so I'm thinking maybe 8 o'clock at night or something like that. I don't know. I have to figure that one out. That one's not active yet, but it's coming. So you guys, again, if you're interested in that, if you're interested, let me know. Okay, let's talk about this trade situation here with Bitcoin. So I'm going to start here with the 30-minute chart. So now we're going to go to the day trade mentality. Everything I just described to you was the larger time frame. So first things first, as you can see, I have lines all over this, right? Those are just support and resistance lines from previous analysis. Switch to the perp chart. Let's switch to the perp chart over here too. BTC perp. I'm picking Binance because it's the first one on the list. You choose whoever you use, right? So if you use Coinbase, you use Binance US, whatever, you use that data feed. Now, so the next step is we need context, right? We need to get a way. We need some sort of formulation of expectations. Well, this is the 30. I'm sorry. This is not the 30-minute chart. Let me switch over to the 30-minute chart. This is now the 30-minute chart. Okay. And what I'm looking for here, step one, is context and price structure, also known as trend. This trend is pretty easy to see here. Okay. What do you guys tell me? What do we see here? You guys tell me. I mean, I see a couple of lows over here. I see a higher low. I see a higher high. I see a higher low. Okay. I see a higher high. What do you guys think? ZN1. Okay. Retail says, so thank you for pointing that out, Konstantinos. Yeah, I'm not going over that right here, but you know what? I know that retail sales number came out, whatever. If there's a surprise there, dollar going higher, we shouldn't be too surprised about the dollar going higher. Okay. Which should have obviously an adverse effect on the other markets. But as we can see, Bitcoin is not acting in an inverse way to that at the moment, although this price action here is interesting, right? That probably has something to do with the reaction to the stock market. Let's just take a look at the NASDAQ real quick. How's the NASDAQ behaving? Okay, negative. All right, that is, if the dollar is going higher, that is what we should see from the NASDAQ, okay? Not one-to-one, but generally. So Konstantinos, I've been talking about that dollar move potentially going higher. It was in a position to go higher. It had that initial push, and then it was just waiting for this news. If dollar is going higher, then expect bearish pressure across these other things, particularly things like the euro, pound, right? We should see some bearish pressure in the stock market as well. And bonds, of course, bond prices should be going lower in that as rates rise, right? So it's all bearish scenario right there. Okay, so anyway, so that's what I think of that real quick. So you guys, Armin, Han, okay. So yeah, this is pretty easy to see, right? Bullish structure. So if we have a bullish structure in Bitcoin, so all that fundamental talk that I just mentioned here, you toss that aside, okay? Because intraday, as a day trader, we're only interested in momentum, and momentum can go both ways, okay? So we can't get opinionated. Now, we're looking for context, and this context says higher lows, higher highs, which means at this point, it's reasonable to anticipate a higher high. Now, it's interesting, like all these lines that I have drawn here previously, I mean, look at the pin bar, right into that resistance and sold off. So it's helpful to know your levels, because it would at least have told you I shouldn't be buying here, if anything, right? If anything. So now we're looking for higher highs though, right? It's reasonable to anticipate more out of our bullish side than our bearish side. But the thing is, where should we be going long? We want to find support levels, right? So on the 30-minute, we have a support over here, 22,257, right? That's a support. But right now, we're at 22,706. That's a 500-point move lower. Is this thing going to pull back 500 points? Probably not over the next 15 or 20 minutes. Probably not. Maybe over the next few hours, it can make such a move. So that's going to be, although that's a notable support, I'm not going to sit here all day and wait for that. There may be opportunities sooner, right? Earlier than that. So it looks like we have some sort of price action going on here, which may be a minor support. Now, going back a bit on my 30-minute, what other price action do I have there? I have a line there, so there must be something there. There was an old support, right, which sort of became a resistance, right? We've blown through it again, and it's now appears to be acting as a support. So I have a minor support basically at 22,621. We can round that to 22,6, something like in that area. So in a bullish structure or a bullish market, it's reasonable to expect support levels to hold. Okay. BTC comes loose from, okay, well, yeah, it's not one-to-one, right? So the relationship is loose to begin with. It's general. So if NASDAQ is getting hammered, like, or it's basically NASDAQ and S&P. NASDAQ is getting hammered, Bitcoin should generally see weakness, right? If NASDAQ is rallying, Bitcoin should generally see strength. I say generally, right? So it's not one-to-one. The correlation is not perfect, first of all. Second of all, you can't take trades on that alone because of that random element, right? So we need more confirmation than just that. But I think it's a helpful piece of information that can at least help us avoid mistakes. Okay, Gary, if you have time of this, what are your thoughts on BUSD? Okay, I'm not sure. Isn't that a what do you call it? A stable coin? Because yeah, I don't know what's I don't have enough information to even answer that question. If tomorrow's news is not okay, can we expect that we're making a B now from an ABC pullback? Okay, if tomorrow's news, what is tomorrow? What I had not seen anything specific on the calendar for tomorrow. What are you referring to there? I know we had CPI. Okay. Or I thought we had CPI, or maybe is it tomorrow? What's the news that you're referring to? Oh, jobs tomorrow. I'm not sure what jobs you're talking about. We had NFP the first week. It's definitely not NFP, and NFP is usually on Fridays. That's usually the non-farm payrolls or jobs report. So I'm not sure what you're referring to there. But okay, so the thing is, as far as ABC pullback, okay, cool, no problem, Gary. So as far as the ABC pullback, first of all, that's not really a question for this time frame. That's a bigger picture question, right? So I mean, just to take a look at that real quick, you're asking if this is a B, right? A B wave. It's possible, right? It can unfold in three. If this is your A wave, which is 3, right? This is possibly your B wave, 1, 2, 3, possibly, or you may get like another little, like a little jittery, like little stumble, like a little pullback, and then one leg higher, right? That could very well be the B. Could be, right? Could be the B. But the thing is, you can't count on that. All right. So if that something like that, Han, is you want to basically anticipate. So if you have the A wave complete, you have the 3 waves, then you should be anticipating the B. And then the price action we have now is basically behaving like a B wave. So at this point, if you're not in it, and again, it doesn't have to be, but if it is, then it's reasonable to anticipate a C wave, which we don't have. And of course, the C wave can be very dramatic, right? But it doesn't mean we're going to have one. So make sure you understand that. All right, so let's talk now, get back to the day trade mentality here. Okay. Yeah, no, so as far as the jobs report, that was the first Friday, man. You missed that. It was like a week ago. All right. So what I want to look at here is, so we've determined from the 30-minute chart that we should be looking for longs generally. We're in a support area, minor support area. Let's now zoom in on our 5-minute chart. This is the 5-minute. Okay. Now I'm looking at the 5-minute. I use the 30-minute to get perspective. I'm not taking trades on it. I'm using the 5-minute for the trade setups. Okay, to basically define my risk, define my profit target. Working with a 5-minute on a day trade time frame, I'm basically looking to risk about 50 or 60 points, something like that, maybe even a little bit more. And I'm looking to target at least that. So I like to use 1.5 to 1. So you figure if I'm risking 50 points, then I should be looking for 150, right? I mean, that's reasonable. Don't make the mistake of you risk 50 points and then you're looking for 1,000-point profit. That's a lack of experience, and you're asking for a lot of trouble with that. You can't play that game. That's a larger time frame magnitude. Don't mix. So on our 5-minute time frame, what do we have here? So we came off this support level, right? We came off that support. I see a bullish pin bar, which I missed because I was too busy talking. And there's a high on that bullish pin bar at 22,707. Right now we're at 22,746. So we're a good 40 points higher off of that pin bar. Okay. Now there's a long signal in play here. That's a long, but the thing is, it's a little away from my entry, and my risk here is going to be greater. All right, but it's moving on the side of the trend. Now, in a situation like this, what do I do? Well, you have to look at the risk. Should I get into something like this? It's not a very comfortable thing, but this thing, because the trend is generally bullish, this thing may break out, right? So here's what I suggest in a situation like this, because we missed the clear setup. You can place a limit order, okay? A limit order somewhere at a better price, perhaps in the midpoint around there. Now, this is not some kind of perfect or special strategy. There's no specific advantage to doing this. All I'm trying to do is get a slightly better price and reduce my risk. Keep in mind, if I use a limit order, okay, to get in at a lower price, now, depends on the platform you use. Some platforms may not let you enter that way. But if I'm using a limit order, realize that if some negative news comes out right in the middle of that, it'll go right through my order and straight to my stop. You realize that can happen, okay? The whole point of the limit order is I don't have to chase this thing, and I'm trying to capitalize on some noise. As you can see here on the 5-minute chart, this is a consolidation. It's very noisy. So there's a good chance that I can get in at a better price, okay, closer to where I wanted to enter anyway, which is the high of that pin bar. You see that? Which is 22,707. So what I can do here is I can place an order, right? I can do it on this thing here. In fact, I'll press this, and you can see my order entry form on here, right? Let's see if I can do this in a reasonable amount of time. So see, this is just a mess. I'd rather do it on the chart. So let's see. If I right click over here, right, and I want to place an order, this thing will let me, right, trade. Okay, create new order. Or it brings me to that anyway. All right, but the thing is, it has a bunch of things input for me. So does it have my price, right? 22,750. That's the price where it is right now. I don't want to buy this thing right now. I want to buy it at a lower price. Okay, so first of all, I want to set this thing up as a limit order. It's set to limit. You see that? So I have market order right here. I have a limit order over here. All right, so I want to set a limit order. I want to set a price. So I'm going to do 22, we're at 756. I'm going to put 22,725. Okay, so it's a little higher. It's a little lower. It's not at the pin bar high. It's a little bit higher than that. It's sort of in the middle, right? I'm looking to take advantage of noise. So 22,725. I'm looking to buy 2 contracts. All right, and I can set my profit law, my take profit and my stop at the same time. You should do this. Okay. So price, my stop price. I'm going to put this. It says here 22,643. That's 100 pips from the current price. That's about 75 pips from where my limit order is. So I'll take that, right? 75. And that means I'm going to need at least 150 or at least 140, at least 140 point profit to justify that, right? So at this point here, I'm basically almost there, right? I'm almost at 1.5 to 1. So let's see, if I put this at, let's see, 725, so 825, 850. This thing says 824. So if I put 22,850, I should basically be almost one. See, look, 1.53. I'm basically at 1.5 to 1. You see this number here? 1.53. I can't highlight it, but it's right there. That's basically that 1.53 is my reward risk. Okay, so I'm basically risking. I'm looking to make a 153 for every 1 that I lose. Does that make sense? So if I place this order here, okay, buy 2. So it placed all the orders. See that? So 22,725 is where I'm looking to get in, right? Buy 2 at 725. I'm looking to sell at 643. Okay, that's my stop loss, and I'm looking to take profit at 850. Okay, so I just basically preset my orders. That's what happened here, and typically that is the habit you want to get in. I don't always have the luxury of doing that. As you can see, when we're pulling back a bit, right? It's a good thing I wasn't chasing this thing. A lot of times when the signal goes off, I have to use a market order. When you're a day trader, that's something you have to do. You don't have time to fumble around with all those orders, right? That took me like a few minutes to do just now. And sometimes we don't have the time to do that. So what you do is you just get into the market and then you place your stop and your target, okay? But you always have to make sure you place that stop, at least the stop. Your risk must always be defined in these things because some kind of news can come out. This thing can turn hard and you'll be happy you stopped out where you stopped out. Okay, we see that happen all the time. You may not be aware of some news or some kind of nonsense. All right, now, so I have that order. Let's see. I don't think it's going to get filled at this moment. Let me see what you guys are saying here. Is there a double bottom on support? Yes. Who answered? Raman, yes. Yes, this is a double bottom, right, at the minor support level. So that there was an inside bar there too. We could have argued that this was a long, all right, at that time. And of course, the pin bar showed up not too long after that. But yes, to answer your question. So we set up an order, right, based on this area right here, right, 725. Is that right? It's 718. Let's put this thing at 725. And let me make this a little bit bigger so we can see what's going on here. Okay, so my limit order is right around there. That's 722, right there. All right, so you mean to tell me the market's going to run away without me and not pull back into this area? I'm going to be patient with this, okay? We're going to let this thing fool around a bit because although, you know, we have the bullish trend and all that other stuff, we've been range bound since, what, for a couple of hours now? 2 hours, 3 hours? We've been in this range. So instead of reacting and saying, well, I'm going to miss out. Instead of reacting, because you could have overreacted plenty of times earlier, right? We have to look at it more from a statistical standpoint or a standpoint of probability. What are the chances that this thing is going to revisit that midpoint of the range? I think they're pretty high. I think they're greater than 50%, okay? So that's why I'm not going to react. I'm not going to sit there, oh, I better buy this thing right now. I better buy it. I'm not going to react. I'm going to play the probability. This is similar to playing poker. I talk about this all the time. If you're not a poker player, you should learn the basics of how to play poker. And I'm not encouraging you to be a poker player, but the decision-making process in regards to putting on day trades is very similar. In fact, a professional poker player reached out to me, and because I made a video about that, and he completely agreed with me and said, you know what, it's amazing how many similarities there are. Now, of course, it's not exactly the same. Look, it's trying to break out. But again, we're not going to react. We're going to play the probability. And one example that I bring up very often with poker is, you know, when you're sitting at the table and you get your cards from the dealer, you know, you look at your cards and most of the time you're going to have a garbage hand, right? Most of the time you're going to have just a low probability hand. And aggressive players will play those lousy hands and just hope for a random outcome. But if you know you're newer, you really want to lean more toward the higher probability hands, right? Which have a better chance of winning over time. So here's the mistake that people make. You see a low probability hand, you throw it away, right? And then it would have been a big win, right? The rest of the cards come out and, I would have had this if I just held on to that, but it's completely random. But now it puts a bias in your mind. You know, the next time I get that 4-5 offsuit or that 4-8 offsuit or whatever, 4-9 offsuit, just a complete lousy hand, okay? The next time I get that, I'm going to play it, okay? And because obviously it comes out. Yeah, 1 out of 100 times, those aren't good probabilities. Right? So if you keep playing that hand, you're just going to lose over time. It's the same idea here. And I talk about that all the time. It's hard for people to understand because we see certain things happen like, oh yeah, pin bar, the pin bar broke out. And so we think that should happen all the time. But the statistics are probably for just a pin bar by itself. I can tell you what the statistic is. It's 50%, right? Half the time it works, half the time it doesn't work, right? So what we look for to gain a little bit more of a probability is other factors, environmental factors like context, okay? So a pin bar coming off of support in a broader bullish trend, now that's another story. That's not the same as a random lone pin bar. Does that make sense? So the probability for a pin bar within a broader bullish trend coming off near a support level is probably greater than 50%. I don't have a specific number, but it's probably greater, okay? So look, here we are. We're going for the breakout now. All right, so this is another situation now to consider. So we're possibly breaking this resistance. It refuses to pull back, okay? So I'm going to do this just for example purposes. Again, I'm doing this on paper. I'm going to take the breakout, okay? So that other limit order, I'm now long from 795. Never pulled back. I could have gotten a better price, but I'm going for the breakout. I'm going to explain why here in a moment. Now, the other order that I set up in here, okay, I'm going to cancel it because I don't want to get stuck in that. Always remember, if you have orders, in the market, you get rid of them. So I just canceled that limit order that I had earlier. Again, it's on paper, okay, just to be clear here, it's on paper. And I now took the breakout, okay, and I haven't even waited for the candle to close. I just took the breakout. So let's see how this performs. In a situation like this, I'm buying something that's in generally a bullish trend, okay? And the probability of the breakout following through should be greater. Doesn't mean that I'm going to get it. Now, the other question is I took the long, and I have to put in my stop and my target. It's the first thing you should do. So where should I put those in? Well, I took a long up here at the breakout level, right? And now I need to give this thing room to fool around. The stop is going to have to go at the bottom of the range because I need to give this thing the whole range. If I put my stop somewhere tighter inside the range, chances of getting stopped out are going to be very high. So I took greater risk here, okay? You can compensate for that. Like maybe I shouldn't have taken 2 contracts. I could have taken 1 contract, okay, instead of 2. That's one way to reduce my risk. Now, if you only trade 1 contract, then you don't have that flexibility. Does that make sense? So my stop is going to have to go here in order to keep this within reason. That's pretty wide. 22,621. That's about 100 and, what is that? 130. It's more than 150 points, like 180 points. It's almost a 200-point stop, okay? And that means I need to make at least 200 points to justify that, at least. That's 1-to-1. Where is my 200-point target? So let's first highlight the levels. So this right about here, let's try to make these even numbers so they're easy to understand. So I got what, 695? I'm sorry, I got 795. So I'm going to put it at 595 just to make it an even 200-point stop, right? 795, 695, 595. That's this level right here. That's below the bottom of the range. And that is a wide stop for a 5-minute chart. All right, but I'm just show you an example here. It's better that we do this in paper trade mode, so it helps to define your mental framework, right? Instead of just sitting here and being afraid of not taking anything, let's take the trade based on what the market is telling us, and let's make our adjustments and see the outcome. That's the whole point of this. It's a learning exercise, right? So that's where the stop is. Now the target needs to be at least 200 points. So where is that, right? So this is 795. So 895 is over here. 995 is up here. This is 200 points, okay, from where I got long. So that's basically my reward risk, okay? Basically, it's not perfect, maybe a little off, but that's the general idea. Now look at that. Look at this level up here. right? Look what's going on up here, right? That's almost the top of that pin bar. So there's going to be resistance up there. It's a tough spot. Well, now, since the market isn't generally a bullish mode right now, theoretically, it should work its way up there, perhaps over the next hour or so. That's a reasonable time frame. But the thing is, we may see conflicting signals anywhere inside of this area, okay? Anywhere. And that's where we're going to have to make tough judgments, all right? So let's see if we can let this run a little bit longer, and let's see if we come up with a conflicting signal where we have to make an adjustment. Now, in these situations, this is what I'm going to recommend. This is a very aggressive trade, okay? I took the breakout. By the way, that's not really my style. I don't take breakouts typically. I like to do that limit order thing, which completely, was not the market was not letting that happen here, right? So here's what I suggest. Look to break even as soon as possible, right? If this thing gives me a hard time and I have an opportunity to break even, you're better off breaking even and then getting back in if you're wrong than taking a series of losses. Think about it this way. If you have 10 trades, 9 of them are break even, and 1 of them's a winner, you're ahead, right? So let me see, I have some questions here. Okay, cool. No problem, Armin. Do you count waves in low time frames? Okay, unless they're crystal clear, Raman, unless they're super clear, no. Because the smaller time frame, the more random it's going to be. So I'm not going to sit there and be like, well, I have a 1, 2, 3, this is a 4, and this is a 5. It can really throw you off. Okay, so I only use waves on larger time frames, like daily time frames. And even there, the waves have to be crystal clear. If they're not, I don't sit there and try to pick them apart. I don't sit there and try to overanalyze them. Either they're clear or they're not clear. Either I see 4 waves and I'm looking for a 5th wave, or I see 5 waves complete and I'm looking for a pullback. It's that simple. I don't sit there and say, well, I think we're in a B of a C of an A, and now we're expecting an X wave. Like I don't get mixed up in that complexity. It's a mistake. Okay, and I've used to, and it would never give me good results. Okay, so good question. I never leverage trade. If you want to risk 2% of your portfolio in a trade and you use leverage 5 times, or you don't use it, okay. Putting stop losses in or okay. So no, as far as using leverage, I mean, as a day trader, leverage is something that that's something you can take advantage of, right? That's one of the arguments toward, why you should day trade. But the thing is, you have to be very careful, because again, leverage is just when it comes to like these markets, leverage is funny, the way they let you adjust it and that kind of stuff. And this is the way you have to look at it. You have to look at your total account size. Okay. So let's use $10,000 as an example. You have $10,000 account. This is the only way to look at it. And you're risking, 2%, right? So how much money is that? That's going to be what, $200? So that's it, right? So whatever leverage you're using is going to determine if you're over leveraged, your stop is probably, because you're risking $200, your stop is probably going to be very tight, right? Which means you're going to get stopped out, most likely. You need to be able to put stops where the market tells you to put them, okay? In this situation here, the market tells me to put the stop here. This is not a level that I randomly came up with because I feel good about it. That's not the reason. The market says that's the range low, and probability basically says that there's a lower chance that it's going to touch this area, but there's a higher chance it's going to touch this area. Why would I want to get stopped out? So if I'm using leverage that's too high, I'm going to have no choice. My stop is going to be somewhere in here, and my chances of getting stopped out are going to be very high. So you can't sit there and say, well, I need to make more money, so I'm going to put on more leverage. You can't do that. You have to keep it in proportion to your account. So if you're going to risk 2% on a day trade, which is kind of high for a day trade, I prefer like 1% or even smaller. That's why it really pays to have a larger account. And there are solutions to that today, by the way. I've been researching some of these prop firms. A lot of them are bad news, but there's some interesting offerings out there where, I mean, you can even borrow up to $1 million. Actually, not borrow, but they give you access to $1 million, which now that makes things very interesting. Okay. I'm researching that, and maybe at some point I'll have more to talk about that. But that is a solution to not having money, enough money. So going back to this situation, you have to look at the stop. Forget the leverage. Look at where the market tells you to place the stop, and then figure out, how you're going to use leverage. Okay, don't look at leverage first. Does that make sense? So if I was working on if I got filled at that limit order that I was showing you earlier, if I got filled there, and my stop would actually be less. Okay, same area, but it would have been basically half, right, or almost half of the risk that I'm taking here. Does that make sense? So depends on if you're still looking to use that same 2% or 1%. That's going to help determine what kind of size you should be putting on, and then adjusting your leverage that way. Does that make sense? When you say 200 points on BTC, that is like 1%. With fees, are you really able to profit? Okay, good question. So when I'm not talking about 1% of Bitcoin, the Bitcoin price, I'm talking about, or when I'm talking about 200 points, I'm talking about the actual structure. Okay, 200 points is because of this range right here, because of where I entered. Okay, I took the breakout, which is not really doing anything here. And breakouts usually should go. Okay, this thing's not going, so that's kind of a problem. But the point is that amount was determined by the price structure and nothing else. I'm not sitting there saying, well, 200 point of the value of Bitcoin, 200. No, that's not where it comes from. So price structure first. That's what I'm looking at. Does that make sense? So as far as, you ask here about fees and blah, blah, blah. Yeah, it should, the fees, I mean, you're looking at what, typically $7 per trade, typically, something like that. It may vary for some people, but you should not be taking 20 or 30 trades a day. You should only be, as a day trader in these markets, you're looking at, I think, a realistic day, maybe 2 trades, maybe 3 trades max. If you're taking like 5 trades, maybe you made a couple of mistakes. If you're pushing 10 trades, you're doing something wrong, because there's not that much opportunity. Okay, not on this time frame. Maybe your time frame is too small. If you're like on a 1-minute chart, you're going to have trades all over the place. So in situations like that, cost becomes a really serious problem. Okay, so you cannot overtrade as far as the fees go. And yeah, so you can come away ahead. Now, of course, we can make an argument for taxes, but I'm not a tax expert. That's another story. But I'm focused more on the fees, and I spend a lot of time. I don't spend a lot of time with day trades on Bitcoin. I trade S&Ps, okay? And it's the same thing. I have the same problems. If I overtrade, the cost, which is a lot less than Bitcoin, even then the cost can add up and make the whole thing fruitless, okay? So you really have to be aware of that. Okay, what price are we at here? 760. So this thing is against me now. A good 30 or 40 points, right? I don't like the way that candle looks. Before this candle closes, we have 2 minutes for that candle to close. Let's do this. I want to see what is going on with the NASDAQ, okay? So NSX USD, and I want to switch my NASDAQ over to a 5-minute. I've done this before. Now look at this, because that's going to give me some clues as to what I can expect in terms of Bitcoin momentum. I mean, the NASDAQ is kind of pulling back here, but that's not what's going on here in the NASDAQ is not exactly bearish, right? I'm not looking at just the candle. I'm looking at this structure. That's a clear-cut range. That's a consolidation, and we are right in the middle of it. So should I overreact to Bitcoin? I mean, the answer is no. I should give this thing a chance. Now, if the NASDAQ goes straight to here, I'm probably going to get stopped out, and I'm going to take a large loss. That's the chance I took getting into this. Now, at this point, I can get out of this, right, for a smaller loss. which might be a good idea, about a 50 point or 60 point loss. And you know what? I think I'm just going to do that, because the smaller the loss, the better. Now, I may get shaken out here, okay? So I'm long from the breakout. We don't have the breakout. I got out at 742. So I bought it at 795, okay? And I blew it out at 742. So, again, I was mid-sentence saying I should probably give it a chance. And then within a second, I said, I'm getting out, okay? Why was that decision so fast? Because the thought that I had right there was, well, a breakout should not be showing me this, okay? And the candle closed, okay? This candle closed. That is not what I should see after a breakout. The breakout, like I said, this breakout should look like that. That's what it should look like. The next 5-minute candle after I enter that breakout should look like that. And that's not what we see here. So take the loss, okay? I'm much better off taking a 50-point loss, right? Which was basically a fraction of the full loss. The 200-point loss was the original loss, okay? So I was able to avoid a potential 200-point loss, and instead only took 25% of it. You understand that? Now that right there, while it may not make sense to some people, that right there is how you make money. Because you understand, when I take a trade, I'm looking to make usually more than 50 points, right? 50 points is like a minimum. So if I'm making 100 points in the next trade, it puts me ahead. That's why it's so important to take the loss. A lot of people will hold on to this and be like, oh, I'll give it a chance. It's still in the range. You can do that, but you're taking more risk. The question is, how much risk do you want to take? Okay, I don't want to take any more risk. You're better off blowing it out and keeping it small. And there's a lot of times where, let's say I had gotten in where I wanted to get in earlier. Let's say at this level here. What's this? My order filled? What is that? Oh, I thought I canceled that order. Is that right? You see this here? I thought I canceled that. You guys saw me cancel that. Oh, I guess that's okay. I don't think I'm in anything. No, I'm not in any. Okay, I don't know what that was. That was weird. I'm like, I canceled it. Yeah, it's not. I'm not in a position. I'm not in anything. Let me just double check this. Yeah, I'm flat. Okay, so this is where my order would have filled before, right? Now this is the point that I was making. If I had bought this thing at the pin bar high, you see the pin bar there? If I had bought this thing there, okay, and I had some of this green, right? And then it turned on me like this. This is a situation where you should break even, okay? Just break even. You gave back some profit. Whether that was worth maybe about 50 points of profit, and you never took the profit because you were looking for the profit target, break even. Break even. As a day trader, just break even. If you have 9 break-even trades and you win on trade number 10, you are ahead, okay? Sure, there's some cost and stuff, but your break-even should try to account for the cost, like break-even +1 kind of thing if you can. But even if you lose $7, 9 times in a row, right? That's, what is that, 7 times 9? 63, whatever it is. I can't do math right now. Yeah, 63. And then you make one trade where you win $50 or $60, right? At minimum, you're broken even right there, at least covering your cost. Does that make sense? But you were always competing with your cost. It's a good point to always keep in mind. I want to try to understand why to use the advantage of using leverage. Okay, so leverage is just really, it allows you to use your money in your account more efficiently. You can think of it that way, right? So instead of tying up all $10,000 to take a trade, you can tie up $1,000 and control $10,000, right? That's basically the idea. So it allows you to do more things, or basically take bigger positions with smaller money. Maybe you only have $5,000 in your account, right? But you want to take a certain position size. The thing is, if you're relatively new, you should not be putting on larger positions. You want to keep things in within reason. And before you even come to leverage, you should really be looking at the structure, like I said before, and using that to determine your stops and your risk and that kind of thing. It comes from there first. All right. Leverage just really, like in Forex, for example, leverage allows you to control a very large position with a very small amount of money. Right. That's why Forex is so popular with people who have no money. Okay. NASDAQ is most of the time a little ahead. Well, it's either way. It goes back and forth. Sometimes it's ahead, sometimes it's behind. Sometimes just the correlation seems to just not be there, right? I see that all the time. So that's why I don't have any opinions on that. But if I see, like, for example, look, NASDAQ is red and it gave us that red candle and Bitcoin's following along, okay. But the NASDAQ, even though the candle is telling us one story, the structure is telling us another story, right? It's still range bound. This thing can easily turn around and be bullish. Okay. So, I should not be shorting Bitcoin right now. I should not be shorting it because we haven't broken any supports. In fact, that's a pin bar to go long. Okay. So I'm just going to do that here. I know I'm here much longer than usual, but I just want to show these examples. Now I got long at what price? 745. Okay. And my stop in this situation basically should be around here. It doesn't have to be. Now, I haven't bought the range high, right? I bought a better price. So I don't have to use the range low, okay, for something like this. I can use a better price because it's not the same reason as when I bought up here. Does that make sense? So in this situation, I can put it at the low of this pin bar, which is what? 524, is that right? 524. So let me go back in, right? And I'm gonna wrap this up here in a moment, but I want you guys to see. Let me go back in and adjust that order. Okay, so I'm going to adjust the stop, right? I want to put a stop here. Can I adjust this thing? I want to let me adjust the order. I should be able to. It's not letting me. Oh, here it is. Oh, because it's right in front of me. All right. So I want to set a stop, right, at, what was that? Was it level again? The level was 660. Where did I get 594 from? 662. 662, right? So we'll say 650. Well, yeah, we'll say 650. That's basically what, 90 points, something like that. Okay, that's my stop. It's the first thing I'm putting in. And then the target, right? If I'm long from 45, where did I get this thing from? I think 45. I'm going to put this thing at let's see, 895. Okay. So as you can see, my reward risk is just over 1.5. Okay. So I changed the order. Okay. And now my stop and my target are in place. So my stop here, let me clear up some of these lines. Actually, I'll draw it with rectangles here. So my stop is here, basically right there, right? In this area right here. That's where my stop is. And my target is at 895. That's up here. Right there. Oh, look, it's in a hurry to get there too. Okay, so 895 right here. Okay. So that's 1.5 reward risk. And now, as you can see, and I'm getting out on both contracts, so I'm not going to sit here and try to ride a winner. I'm not going to do that. All right, so let's just see how this thing goes. What is that? Oh no, no, I'm going to keep it. I keep them. I use my white screen. Okay, that's what I use. Don't tell me what to use. Maybe this is what's easier on my eyes. So if it's not easier on your eyes, I'm sorry. Okay, okay, no problem. Why not just under the pin bar? You took the trade off since it is going. You would probably just close it off. And okay, I'm not sure what your question is. That would be like 30 or 40 points, and take profit would just need to be high of the range. I'm not sure. Let me read that again. Well, look, it's almost not my target. Why not just under the pin bar, you took the trade off since it's going, you would probably just close it off. I'm not sure what your question is. In that situation, basically, you know, we were selling here, and I was not interested in taking any more risk, so I just blew it out to try to keep the risk as small as possible, right? And with the idea to get back in. And look, so I saw the next setup. That was pretty quick. Nice candle off of that. Okay. NASDAQ is trying to go up a little bit here. Looks like we're going to reach the target. Okay. I mean, look how quickly that changed. What usually leads to something like this, right? You're like, wow, that was amazing, right? It looks magical. But what usually leads to something like this is people got short in here and they get squeezed. That's usually what leads. Like I said before, when I got out of that trade, the first thing I said to was, we should not be shorting this, okay? Because we're shorting something that's generally strong, and you get caught in these squeezes. This is shorts getting squeezed. We now broke out of this range. We broke out of this part of it anyway. And look, we almost touched the target, but I guess everyone else had the same idea. They're watching me. I got only 15 people watching me, but somehow they're watching me. And they placed the orders in advance there, and they all got out, and now I'm stuck in this thing. From the second trade, you just got back in it. Okay, that would be, I don't understand. No, the second trade, I just simply got in because I saw a setup. And I'm not going to, you know, in a situation like that, it tells me to buy again after I got out. As a day trader, I need to be prepared to get back in. So I don't fully understand your question. Maybe you can clarify that a little bit. But so let's see what time we have 4 minutes until this candle closes. And normally on something like this, right, I'm not going to demonstrate this now, but normally on something like this, what I would do, since I had 2 contracts, I would get out of one and try to let one run until I got a conflicting signal. That's how you maximize a trade. And if the market wants to pay more, you're giving the opportunity. You're giving it the opportunity to pay more. But in this situation, I'm not going to sit here for another hour, so I'm just going to let this thing tap the target, hopefully. If it doesn't tap the target, I'm just going to get out, okay, and take whatever I can get. So, yeah, so David, I'm sorry, I don't understand your question. Maybe someone else can clarify the question if they understand it. So let's see here. We have 3 minutes. Do I get a conflicting pin bar? What do I get here? Let's see. I'm not going to make any judgments yet. I want to see at least the candle close. Let's pull this thing up over here and see, you know. All right, so it says there I'm up $189, again, on paper. All right, so I lost what, like less than that. We'll take a look at that in a moment when I look at the in fact, I guess we can look at that now. Let's see here on my history. So on that previous trade, can I see that here? I should be able to see that. On the account history, I should be able to see it there, right? Is that right? So I lost on that previous trade. I lost $14 on that previous trade, right? And I'm way over that now. Okay, so that seems strange. I think I lost more than that. I don't understand what this thing is calculating. Let's see how this candle closes. All right, I'm talking about putting the stop loss under the pin bar. You took the trade off instead. Well, okay, so you're saying I should have moved the stop. Is that what you're saying? I should have moved the stop from basically the range low. I mean, if that's what you're saying, I could have moved the stop and basically reduced my risk. I could have done that. But the thing is, I wanted the smallest loss possible. Okay. Usually you're better off taking the smaller loss. Sure, I could have given it a little more room, and if I had done so, I never would have been out of the trade. Right? I'd still be in the trade, and that would be one loss that would have not I've had to take. Right? So I would avoid the cost. I would avoid the loss. If that's what you mean, sure, you can do that. But the thing is, there's no guarantee that the market was going to cooperate like this. Right? So I'm looking at the maximum risk, and I don't want, even if I put it there, I'd still have to lose more money. I don't want to lose more money. I want to keep that risk. I want to keep that loss as small as possible. In fact, I probably should have gotten out even sooner. Okay, but we can after the fact we can say whatever we want. So the thing is, you're better off just over time, right, through the experience that I have, you're better off just taking the loss or breaking even. Like in this situation, if this goes straight back to my entry, I should just get out and break even though there's a profit in this thing right now. How much time do I have? I have less than a minute. Why put the 90-point stop on the second trade you got in instead of the 40-point stop? Oh, well, okay. So you're asking, again, I'm still confused. I put the stop on the second trade that I took. I put it under that pin bar. If you're talking about why I don't put it under this pin bar, if that's what you're talking about, it's because it's too tight on a 5-minute chart. That's way too tight. You can't do that on a 5-minute chart because the noise on this time frame is so wide. It can easily tap that out, even though after the fact, oh, it never even came close. Well, so I need to give this thing room because I know there's plenty of instances where you take these pin bars and next thing you know, it's fooling around below the pin bar and then it reverses. Okay, so you need to give it some room. You have to kind of think of it from like an average true range perspective. That's really kind of how you have to think of that. You can't use 5-minute pin bars like that. Okay. Yeah, that's why. That's a good. Okay, I get it now. That's the reason. On this time frame, the average true range is too wide. Okay, so it looks nice only after the fact. That's what you should be thinking, right, in terms of average true range. So my typical stop will be about 50-60 points. Okay, if it coincidentally happens to be about that, then okay, but typically 50-60 points, something like that, maybe a little more, with a typical profit target of 100 to 150 points, something like that. Okay, I got the candle close. I don't like this candle. It's an inside bar, right? Sell signal developing there. NASDAQ is not doing anything here. There's theoretically no reason to get out, but I'm getting out. Okay, I'm getting out because I'm locking in the profit. 793. Okay, so let me see what was my total on that. So it says here that I made $96. Okay, now I'm not sure what this is over here. Closed short position. I wasn't short. There's a mistake in there. Anyway, the point is I made more or just about the same as what I lost in this getting out of this over here. Does that make sense? And I'm not willing to give this thing a chance even to go back to break even. That's another choice you have, right? You can let it go back to break even and just give the thing a chance. But in this situation, hey, you know what? My first trade was red. Let me make my money back. Let me get out of here. All right, that's usually the better way to go. All right, so you guys got that? I've been talking way too long today, but there were some good market examples here, and I hope you got something out of this. Okay, if you put a question and I missed it, I apologize. Do me a favor, press the like button or subscribe to the channel if you're new to the channel here. It always helps. I am working on developing better content for this channel. All right, so any support helps. Also, check the links in the description. If you're not in my Discord community, you should be there. There is a lot of very valuable information for free people, especially on the academic side. If you check the Learning Resources channel, I mean, it's like a learning module in there. Bill did an excellent job. He put together all this stuff in there, and it's really gives you a good academic perspective on this. And you need that first before anything else. Okay. If you'd like to know about my training program, send me a message. If you'd like to know more about the auto signals, which are a very exciting thing, send me a message. And if you'd like to become an active investor, member of my group, then there's a lot of value there. Okay. So again, thank you again for watching. Thank you for your support. If you have any questions, you know where to find me. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.